Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 23rd of July, 2021. We had a real turn of events here this week as the market finished pretty much near its highs, and we have green pretty much across the board except for the XLE, which is energy, and the volatility index. So let's look at the charts and make some sense of this. The S&P 500, as we know, last week we were looking at this horizontal line in the 50-day moving average as a potential level where buyers would be found. That's exactly where they were found, and it was just a screaming rally higher after starting on Tuesday. Monday we gapped lower, closed near the lows of the day. I'm sorry, we had a little bit of a rally at the end of the day, and then it was just up, up, and away. There was no pullback opportunity. We rallied right through the 5-day moving average, the volume weighted average price from the peak, etc. This market has just an incredible number of buyers still in it looking to purchase on pullbacks. So you have to be impressed with the strength here and continue to give the benefit of the doubt to the buyers. Next week, we'll see if this prior little band of resistance holds as support. I think about 435 is the more important area. If we take a look at this 15-minute chart, this line right here is the week-to-date volume weighted average price. So you can see we closed well above that. There's some room for pullback next week, and again, I think 435 is going to be an important level if we do see some pullback. Here's the same 15-minute chart for the NASDAQ, and you can see the week-to-date volume weighted average price way down here at about 358-ish. So we're a little bit extended in the near term, but I think that a lot of people were looking for this market to decline more significantly than it did. They got short and they got stuck, and then other people continued to think, hey, it's up too much, and tried to short it. But if you just use each day the volume weighted average price, like for today, and you say, I don't want to trade against the direction of the volume weighted average price, you wouldn't be trading short. If we look at the Thursdays, you can see that it dipped below the volume weighted average price briefly, but then rallied back up. And then on Wednesday, same story. We maintained above that volume weighted average price. On Tuesday, we maintained above that volume weighted average price for that session the entire time. So, buyers remain in control, and there's no such thing as up too much if there's still buyers in the market. We're at a record high for the NASDAQ. The Russell 2000 came down to the year-to-date volume weighted, the year-to-date it rallied up to. We came down to the volume weighted average price from the November low that we had identified, and that was pretty much the low. I was hoping we would come down a little bit deeper. The market doesn't care what I think or hope for, but you can see again that we're back to the midpoint of the range that we've been in since February. We bounced from the low end right up to the midpoint, and perhaps we'll see a higher low and a higher high, but right now we still have to be a little bit cautious with a declining 20 and 50-day moving average. Over to the 15-minute time frame, you can see we're maintaining above the week-to-date volume weighted average price, but not nearly as impressive a performance, obviously, as the NASDAQ or the S&P 500. Looking to a 30-minute time frame, we can look at a volume weighted average price off the most recent high, and you can see that's exactly so that's this peak right here. That's exactly where we found supply on that bounce over there, and then again this week. So that volume weighted average price will continue to be significant. I would say keep an eye on that. If we can hold above 217, 216 and a half, 217 next week, then I think we have a possibility that we can push through that and perhaps make some progress. But we have the potential then for resistance up in here. So I'm not sure it's a great risk reward in the Russell 2000. Semiconductors got hit right down to the year-to-date volume weighted average price, and just again another incredible bounce here that it gapped lower Monday morning, and then buyers immediately stepped in. They maintained control throughout that session. That's at that point it's the 1-day volume weighted average price. At this point it's the 2-day. At this point the 3-day, 4 and 5, etc. But looking at this again, from this move, we held above the 2-day and the daily volume weighted average price. So if we're to see a pullback, I think that the area that you would look for potential support is at about the 252 level. And if it does that, that is, pullback, I think it's likely that it would be the basis for a higher low and maybe continue higher again. The IBB, the biotechs group, as you know, is the one that I follow. It's very different than the XBI, which is another biotech. And you see, if you look at the XBI, you'd think the biotechs are in a downtrend, whereas you look at IBB, it's in a great uptrend. So which one do you believe? It depends on which one you trade. It doesn't matter. It's, they have different components, obviously, otherwise they wouldn't be diverging like that. But I focus on the IBB, and in my view, biotechs are in an uptrend because they're making higher highs and higher lows above a rising 20 and 50-day moving average. As I mentioned to subscribers, these levels are where stops ought to be right now, and it looks like the IBB should be headed for 170-ish or so. Financial stocks still stuck below that declining 50-day moving average. I really don't see an advantage to being involved in them right now. Some of the moves this week were really pretty incredible off of the volume weighted average price from the most recent relevant higher low. If we look at the 65-minute in Facebook, this is one I pointed out when it was right here, basically saying be aware of this volume weighted average price. Because it was also, it was an important pullback level, and it was also where we had previously seen that day, earlier that day, or the prior day, that NVIDIA bounced exactly from that volume weighted average price, and then Amazon kind of did the same exact thing in there, as did AMD, bouncing from the volume weighted average price from this low. It's also, on AMD, we saw it was the year-to-date volume weighted average price and the 200-day moving average in there. So when you put these things together, you start seeing a bigger picture. Now AMD is a little bit extended here. Perhaps next week it does something like this, pulls back towards that 5-day moving average, and then there's a low risk, high probability setup to the long side. But right now I wouldn't certainly be chasing any of these moves. Another one that, as I mentioned, I talk about ARK sometimes. This is what I'm hoping will happen in ARK on the daily time frame, although it seems like it's holding up a little bit better. There's the year-to-date volume weighted average price. Then we want to look at the 65-minute time frame. The volume weighted average price off of that May low was pretty much the low in there, and the volume weighted average price off the peak is pretty much the high. I'd like to see if ARK is going to, the bullish scenario for ARK is it does something like this and then continues to move higher. Otherwise, maybe we move down towards this level and then fall apart. I think that because the market is an overall uptrend, it's more likely that it's to resolve to the upside. But we are right at the 20-day moving average, the year-to-date volume weighted average price, and the volume weighted average price off this high. So a little pullback first might be the way to get ARK going. Let's follow up on some Bitcoin because last week I said it looked like pressure was building to the downside, and it did break lower, but it also had a quick recovery, and we're basically back to exactly where we were last week. So I just don't see anything exciting happening in Bitcoin. We're still in a downtrend. It might be trying to neutralize here. So we have the daily chart on the left, and on the right, each one of these candles is created with 4 hours. So, this market trades 24 hours a day. 6 candles equals 1 day on the right. It just gives us a little bit better detail is all. Anyways, that'll do it for me. Hope you have a good weekend. Thanks for tuning in.